Good evening, ladies and gentlemen. This is Clueless 8, and this is the end of the day report for January 25th, 2016. The key word is volatility clusters, and that's exactly what we're going through right now. We had a 700-point rally on the Dow Jones Industrial Average from the bottom of last Wednesday, and we gave back roughly 209 points of that. As a technician, I try to stick to my discipline of what I do. If I listen to every single chatter and noise that's out there and not implement and stick to my discipline and focus of studying the internals, which are the vital signs of the market, both from a short and longer term perspective, then I'd just be like 99%, my favorite line, of the traders and investors out there. And I wouldn't be sitting where I am today, which I'm extremely grateful for. And that's what it's all about. On a given day, between large winners and huge profits at the first part of the day, and a slight give back net in the portfolio on the P&L in the last couple of hours of the day, to me is A-okay. Because the reality of the business is that in order to make large macro trades in between taking in smaller profits on a faster intraday basis, but in order to make the large macro trade, which I've consistently shown repeatedly for years, and specifically more since I started my service on April 15th of 2014, I have to tell you that I've seen the same old story, again, one of my favorite lines, and the same old words, and the same old comments, and the same old emotional rants over and over again. The key to success in any business is to stick to what you think and what has worked well over many years. That doesn't mean you have to be right every 15 minutes. We all know that. But despite all that, the behavioral tendencies of human beings, and specifically traders, who have a very myopic and short-term vision of what's going on in the markets, and a complete misunderstanding of global finance and economics, leads many traders and investors to never really make the real money. We all make mistakes. The question is, how big are the mistakes? The other thing about trading and investing, it's that Rocky Balboa quote. It's not how many times that you deliver the knockout, it's how many times you stand up after you fall. So, what I tend to see over and over again, and I study myself as the number one case study, or the lab rat if you want to put it, but I also study human behavior in the form of my members, the media, traders out there, very dogmatic, one-sided views of the market from so-called market gurus, and that applies to both bulls and bears, is that they refuse to be flexible. Everyone talks of long-term game, but then at the same time, every time their portfolios are down 5%, 10%, 15%, 20%, they tend to think in 5-minute time frames. How somebody handles their mental conditioning and behavioral and emotional stability in managing their trades, that's something I cannot teach. I try, but then at the same time, that has to come from within. There are many ways to do it. Keep trading sizes small, to take large profits on technical overbought conditions, internals, resets, understanding that a pure maniacal drop in the market for some valid reasons, of course, and a pure panic are great buying opportunities over the short term. What I'm talking about is not a resumption of the bull market per se. I really don't care about it. Because to me, what's important is my P&L, is my portfolio growing week by week, month by month. And that's what it's all about. So what we're talking about here is as I've shown clearly multiple times, and for focused and disciplined Clueless 8 members who have tracked and the tried to understand the nuances and the complexities of the market, they're doing very well. The majority who seem to have a love affair with the little demons in their head, another one of my favorite lines, both on the, and specifically during large market drops, who never capitalize on tactical reflex bounces, which are just technical retracements. That's what it's all about. Um, I have nothing to say to them. Another one of my favorite quotes. A lion doesn't listen to the advice of the sheep. Now, whether you're a lion on the short side or the long side, it really doesn't matter. It's a matter of conviction. It's a matter of having a basis for why you're doing what you're doing. So what I suggest very strongly to everyone, for their own benefit, is to stop playing the emotional game in their head, stop coming out with all these typical cliche lines that we are going into a long-term bear market, that the bull is dead, and all that stuff. And the same story when the markets are roaring. They refuse to put out short hedges like we did, or some of us did, and benefited tremendously. That we did on Friday, for example. Took out large profits on that tactical bounce, that 700-point rally. Yeah, we didn't catch the whole entirety of it. I know I didn't, but I got a big bunch of it, big part of it. So people who refuse to basically read the comments, read the suggestions, the trade alerts that put out there, put out the short hedges in the form of the UVXY, the SPY, the SPX puts, and any other instruments you'd like to use, did extremely well. Then came the tactical bounce off certain lows, and they were huge winners. It's about selectivity also, right? Not just playing the indices. The VRXs of the world, 100% plus on the options intraday. On the stock itself, a good solid 5 to 6%. The tactical play on DWTI, the inverse of the oil of oil, the ETF, DWTI, 45 points. No one's saying you have to catch all of the 45 points, but even if you catch 15, 20, 30 of those points, you think that's not a good trade? So both intraday and medium term, one has to be very cognizant with what's going on. Now, I don't expect, I realize a lot of people are not full-time traders, but that's okay. But that doesn't mean that you let go of your mandatory obligation to understand the internals and the technicals of what is happening. Now, keep in mind, I am not a fundamental trader per se. I do understand global macro fundamentals and individual company fundamentals better than most of traders out there, including most of you who are listening to this. There's no question about it. But I also know that Wall Street doesn't rely on just fundamentals on doing what they're doing. Because if we just listen to the one-sided, lopsided view of the dogmatic bears, then the Dow Jones Industrial Average should be trading at 10,000, not at 16,000 or 15,000 plus 15,885, right? Yeah, it's true. Because there are certain things called animal spirits. That's what drives our nation. That's what drives human beings. The evolutionary basis of human beings all the way since man walked the earth has been one of a bull market. In other words, we always climb a wall of worry. Saying all that, let's dive in straight into technicals. So first I'm going to show you, I'm going to do two of these video casts tonight, so we'll have ample time. So first of them showing you is a daily chart of the E-minis or the S&P futures. Okay, so this is where we are. So if you just showed this to somebody out there, they'd be like, "Oh my God, it's over. We're going into Armageddon." Well, what we're doing is paying tactical bounces. So when I look at this, the first thing you have to focus on, I'm going to keep this very simple, are volatility clusters. These are volatility clusters. Okay, this was the big crash, August 24th. This was September 29th. We came down and tested those levels, and now we're here. So this volatility cluster, for example, is very similar to what's going on here. Very similar to what's going on here. So that doesn't mean we're not going to have these sharp moves up and down. We're capitalizing on it. I have no problem with it. So that's exactly what's going on here. Now, the way it's going to resolve itself is not this. I have no idea. Because when this happened, did you have an idea? Nope. Because if you did, you could have taken $10,000 here and sold it up $200,000 to $300,000 up here, playing in index calls. But you didn't do that. So the point is that at this point, what I'm looking for, very simply, is a move up to retest these levels here, which it did already, right there, 1950, and then it pulled back. Well, I'm sorry, it hasn't done that. It went to 1925. So I'm basically looking for a retest of somewhere in this zone, somewhere between 1980, which was a falling 34-day moving average, and the 50-day moving average, right there. Now, do we get back to 2000? I have no idea. Maybe we do that in February. But the point is that even a move from 1870 up to 1925 or 1940 up here is tactically a fantastic trade. You're talking hundreds of percents in the form of the index calls. Saying all that, is it possible that we come down and retest these lows again? Yes. But what I'm saying is that at this point, the probability of the markets moving up and testing this 1940 level or so is pretty high. If you look at, I'm going to run out of time here, but I'm going to show this quickly. If you look at the stochastics here, despite today's large candle, right? This was today, and it still was an inside day when it comes to the E-minis. This was the big move into Friday. This was today, and this is what's happening right now. Futures are up slightly. The bottom line is that look what happened to the internals. The internals barely budged. They are still moving higher. Unless they completely come down all the way, which means we're going to do a retest of this 1820 level again, the reality is that the internals are suggesting that we are still got a little bit more room to go. Saying all that, an inside day, that means this bar is inside this bullish engulfing candle and large candle. And let's see what happens. So I'm going to focus on that. We had a rising wedge, which fell. Talked about that extensively on Friday. Asked people to put the hedges on, and the ones who did got the UVXYs up $5-6, looking fantastic. And at this point, engagement with the 1940 on the E-minis, which is roughly about 1950 or so on the S&P 500, is likely. Saying all that, this is the last part of January. We got big earnings coming out this week. Let's see what goes on. Thank you for listening.